Hey there, future millionaires. I'm Coach Chad Christian, and I'm here to guide you through the exciting world of stock trading. With the right knowledge and strategies, anyone can learn to navigate the market and unlock their financial potential. In this video, I'm going to break down the basics of stock trading in a way that's easy to understand and apply. So grab your notebooks, get ready to take some notes, and let's dive right in. Let's be honest, the world of finance can seem a bit intimidating at first. But here's the thing, stock trading isn't just for Wall Street hotshots or financial gurus. Think of the stock market as a giant marketplace where companies offer small pieces of ownership called stocks to investors like you and me. When you buy a stock, you're essentially buying a tiny slice of that company. As the company grows and becomes more valuable, so does your investment. Owning stocks can provide you with a passive income stream through dividends. Dividends are like bonuses that companies pay out to their shareholders, rewarding you for being a part of their success. But let me be clear, stock trading does come with risks. The good news is, you don't have to be a financial expert to get started. I'm here to guide you every step of the way, providing you with the tools and knowledge you need to make informed trading decisions. Throughout this video series, we'll delve into the ins and outs of stock trading, covering everything from market analysis to risk management. Remember, knowledge is power, and the more you understand about the stock market, the more confident you'll become in your trading decisions. The key is to take action. So, are you ready to take the first step towards financial freedom? Let's lay the groundwork for your trading journey. Before you even think about buying your first stock, it's crucial to understand the fundamentals of how the stock market operates. We'll dive deep into the mechanics of the market, exploring concepts like supply and demand, market orders versus limit orders, and the different types of financial instruments available to you. Once we've covered the basics, we'll move on to the exciting part, identifying profitable trading opportunities. We'll dedicate an entire section to risk management, teaching you how to protect your capital, set stop-loss orders, and diversify your portfolio to minimize potential downsides. Right, let's get down to business and talk about the stock market. At its core, the stock market is simply a platform where buyers and sellers come together to trade pieces of companies, which we call stocks or shares. Thanks to technology, it exists electronically, allowing anyone with an internet connection to participate. Now you might be wondering, why would companies even want to share ownership with the public? Well, it's a win-win situation. Companies raise capital to expand their operations, develop new products, or invest in research and development. In return, investors like us get a chance to share in the company's success and potentially earn a profit on our investment. The stock market is home to a vast array of companies, from small startups with big dreams to multinational corporations with global reach. Each company listed on the stock exchange has a unique story to tell, a journey of innovation, growth, and challenges. As an investor, it's your job to understand these stories, to analyze a company's financial health, its competitive landscape, and its future prospects. Now, you don't need to be a financial whiz to navigate the world of stocks. There are plenty of resources available to help you, from online forums and educational websites to financial news outlets and even investment apps. By diversifying your portfolio across different sectors and companies, you can mitigate risk and increase your chances of long-term success. Now that we've got a basic understanding of what the stock market is and the players involved, let's talk about the fundamental principle that makes it all tick: supply and demand. When demand for a stock is high, meaning more investors are looking to buy than sell, the price of the stock tends to go up. Conversely, when supply is high, meaning more investors are looking to sell than buy, the price of the stock tends to go down. Understanding supply and demand is crucial for identifying potential trading opportunities. By analyzing market trends, news events, and company performance, you can get a sense of whether a particular stock is likely to experience increasing demand or decreasing demand. You've probably heard of the Dow Jones Industrial Average, the S&P 500, or the Nasdaq Composite. These are all examples of stock market indices, which are essentially baskets of stocks that represent a particular sector of the market or the overall market performance. Think of them as barometers for the stock market's health. While individual stock prices fluctuate throughout the day, tracking the performance of these indices can give you a broader perspective on market trends and sentiment. Understanding how to read and interpret these indices is a valuable tool for any investor. Now that you have a better understanding of the stock market, you're probably wondering how to actually start buying and selling stocks. Well, you'll need a brokerage account, which acts as your gateway to the market. A brokerage account allows you to deposit funds, place orders to buy or sell stocks, and track the performance of your investments all in one place. There are many different brokerage firms out there, each offering a range of features, fees, and investment options. Opening a brokerage account is typically a straightforward process that can be done online in a matter of minutes. All right, folks, now that we've covered the basics of what the stock market is and how it operates, let's dive into the exciting part: analyzing the market to uncover potential trading opportunities. Just like a detective relies on evidence and observation, we'll use a combination of fundamental analysis and technical analysis to guide our decisions. Fundamental analysis involves digging deep into a company's financial health, examining its revenue, earnings, debt, and other key metrics to determine its intrinsic value. Technical analysis, on the other hand, focuses on chart patterns, trading volume, and other market indicators to identify trends and predict future price movements. By combining these two powerful approaches, you'll develop a comprehensive understanding of the forces driving stock prices and be well equipped to make informed trading decisions. Section 2. Fundamental Analysis, Peeking Under the Hood. Fundamental analysis is about understanding a company's financial health. Think of it as your due diligence before investing. You wouldn't buy a house without an inspection, right? The same applies to stocks. Ensure the company has a solid foundation. Examine financial statements like the balance sheet, income statement, and cash flow statement. These provide a snapshot of the company's financial health. They're like a company's report card. Don't worry if you're not an expert. Resources are available to help. Understand the industry the company operates in. Is it growing or facing challenges? What is the competitive landscape like? Are there regulatory changes that could impact profitability? Knowledge is power. The more you know, the better your decisions. Section 3. Technical Analysis, Reading Between the Lines. Technical analysis focuses on chart patterns, trading volume, and market indicators to identify trends and predict price movements. It provides insights into market sentiment and the forces of supply and demand. A stock chart is a visual representation of a company's price history. By studying these charts, we can identify patterns and trends. For example, a stock trading within a certain range might break out with a significant catalyst. A sudden surge in trading volume could indicate something big is about to happen. Technical analysts use various tools and indicators to interpret chart patterns. Popular indicators include moving averages and the Relative Strength Index, RSI. Learning these tools helps anticipate price movements and make informed trading decisions. Section 4. News and Events, Staying Ahead of the Curve. Remember how we talked about the stock market being influenced by real-world factors? Well, news and events play a crucial role in shaping market sentiment and driving stock prices. Staying informed about current events, both domestically and globally, is essential for any investor. Economic data releases, such as unemployment figures, inflation reports, and GDP growth numbers, can have a significant impact on the market. Positive economic news tends to boost investor confidence, leading to higher stock prices, while negative economic news can trigger sell-offs and lower prices. Political events such as elections, policy changes, and geopolitical tensions can also create volatility in the market. Investors often react to uncertainty and risk, so any events that introduce uncertainty into the equation can impact stock prices. Company-specific news such as earnings reports, product launches, mergers and acquisitions, and management changes can also move the needle for individual stocks. Positive news can send a stock soaring, while negative news can drag it down. The key takeaway here is to stay informed. Make it a habit to read financial news, follow market commentators, and set up alerts for companies you're interested in. By staying ahead of the curve, you'll be better positioned to capitalize on opportunities and mitigate risks. Section 5. Putting it all together, your winning strategy. Now that we've covered the fundamentals of market analysis, it's time to develop your winning trading strategy. Define your investment objectives and risk tolerance. Are you looking for long-term growth or short-term profits? What is your risk appetite? Develop a trading plan that aligns with your goals. Outline entry and exit points, risk management, and profit targets. Stay disciplined and seek guidance from experienced traders or advisors. Stock selection, finding your perfect match. All right, future Wall Street wizards, it's time to talk about selecting the right stocks. Think of it like finding your perfect match in the world of companies. You wouldn't just marry the first person you meet, right? You'd want to get to know them, understand their values, and see if you share a vision for the future. The same goes for stock selection. Find companies that align with your investment goals and values. Investing is about more than just making money. It's an opportunity to support the companies and industries you believe in. Section 2, Value Investing, Unearthing Hidden Gems. Value investing, championed by legends like Warren Buffett, is all about finding those diamonds in the rough companies that are undervalued by the market but have strong fundamentals and long-term growth potential. Think of it like going bargain hunting at a flea market. You're looking for hidden treasures that others have overlooked, items with intrinsic value that are just waiting to be discovered. Value investors are like financial detectives, meticulously scrutinizing financial statements, analyzing industry trends, and assessing management teams to uncover those hidden gems. They look for companies with strong earnings, low debt, and a history of consistent profitability, signs of a healthy and well-managed business. The beauty of value investing is that it allows you to buy into great companies at a discounted price, giving you a margin of safety and the potential for significant returns over the long term. Of course, value investing requires patience and discipline. You're not looking for quick flips or get-rich-quick schemes. You're in it for the long haul, believing in the underlying value of the companies you invest in. But trust me, when you unearth that hidden gem and watch it shine, the rewards can be substantial. Section 3, Growth Investing, Riding the Wave of Innovation. Now, if you're someone who thrives on excitement and isn't afraid to embrace a bit of risk, growth investing might be right up your alley. Growth investors are all about identifying companies that are on the cutting edge of innovation, disrupting industries, and experiencing rapid revenue and earnings growth. Think of companies like Tesla, Amazon, or Netflix in their early days. They were pushing boundaries, challenging the status quo, and capturing the imagination of investors worldwide. Growth investors are drawn to companies with a strong track record of innovation, a large and growing addressable market, and a visionary leadership team that's not afraid to think big. They're willing to pay a premium for these high-growth companies, believing that their future earnings potential justifies the higher valuation. Of course, growth investing comes with its own set of risks. High-growth companies often operate in competitive and rapidly evolving industries, and their future success is far from guaranteed. However, for those with an appetite for risk and a long-term investment horizon, growth investing can be an exhilarating and potentially lucrative strategy. Section 4. Dividend investing, creating passive income streams. Now, let's talk about a strategy that's all about generating a steady stream of passive income, dividend investing. Dividend investors are like landlords who collect rent checks from their properties, but instead of owning physical buildings, they own shares of companies that pay out a portion of their profits to shareholders in the form of dividends. These dividend payments can provide a regular source of income which can be reinvested back into your portfolio to accelerate your wealth-building journey or used to supplement your living expenses. Dividend investors typically look for companies with a long history of paying dividends, a sustainable dividend payout ratio, meaning they're not paying out more than they can afford, and a strong track record of profitability. They're often drawn to well-established companies in stable industries, such as utilities, consumer staples, and healthcare, as these companies tend to generate consistent earnings and have a shareholder-friendly approach to distributing profits. Dividend investing can be a great strategy for investors looking for a combination of income and growth. By reinvesting those dividends, you can benefit from the power of compounding, turning those small payments into a significant source of wealth over time. Section 5. Don't put all your eggs in one basket. Diversification. Now, before we wrap up this section on stock selection, let's talk about one of the most important principles in investing: diversification. You've probably heard the saying, don't put all your eggs in one basket. Well, in the world of investing, diversification is your basket, and your investments are those precious eggs. Diversification simply means spreading your investments across a variety of different asset classes, sectors, industries, and geographies. By diversifying your portfolio, you reduce the impact that any single investment can have on your overall returns. Think of it this way: if you invest all your money in one stock and that stock plummets, your entire portfolio takes a hit. But if you have a diversified portfolio, the impact of that one stock's decline is cushioned by the performance of your other investments. Diversification is like an insurance policy for your portfolio, helping you weather market storms and achieve your long-term financial goals. We'll delve deeper into diversification strategies and techniques later in the series, but for now, just remember that spreading your investments across a variety of assets is one of the most important steps you can take to protect your capital and increase your chances of success in the stock market. All right, my savvy investors, let's talk about the crucial aspect of trading that can make or break your success: risk management. Think of it as your financial seatbelt, essential for protecting yourself from potential crashes. Even the most experienced traders experience losses. The key is to manage those losses effectively and protect your hard-earned capital. One effective tool is setting stop-loss orders. It automatically sells your stock if it drops to a certain price. Determine the right stop-loss level based on your risk tolerance and stock volatility. Fear and greed can wreak havoc on your trading decisions. Fear slams the brakes, greed floors it. Fear makes you sell winners too early, greed holds losers too long. Keep emotions in check, make rational decisions. The market is driven by supply and demand, not feelings. Have a well-defined trading plan and stick to it. Take profits when your plan dictates. Accept losses, learn, and move on. Successful trading is about consistent, disciplined decisions. Now, before we get too far ahead of ourselves, let's talk about setting realistic expectations. I know you're eager to start raking in those profits, but it's important to understand that becoming a successful trader takes time, effort, and a healthy dose of patience. You're not going to turn into Warren Buffett overnight. Remember the fable of the tortoise and the hare? The tortoise, with its slow and steady approach, ultimately wins the race. The same principle applies to investing. Don't expect to get rich quick. Focus on building a solid foundation of knowledge, developing a sound trading strategy, and making consistent, disciplined decisions over time. Remember, the stock market is a marathon, not a sprint. It's about the long game, not about chasing short-term profits or trying to time the market perfectly. Set realistic goals for yourself, both in terms of your learning curve and your financial returns. Don't get discouraged by setbacks or compare yourself to others. Everyone's journey is different. Focus on your own progress and celebrate your successes along the way. Remember, investing is a journey, not a destination. Enjoy the ride, learn from your experiences, and don't be afraid to seek guidance from those who've been there before. Section 4, the power of patience. Time is your greatest ally. Now let's talk about one of the most powerful tools in your investment arsenal: patience. In the world of stock trading, patience isn't just a virtue, it's a necessity. Remember, we're not playing a get-rich-quick scheme here. We're in it for the long haul, aiming to build wealth steadily and securely over time. Think of your investments like planting a tree. You carefully choose the right spot, nurture the sapling, and patiently wait for it to grow into a strong, fruitful tree. You wouldn't expect to see fruit overnight, would you? The same goes for your investments. It takes time for your money to grow, for companies to execute their strategies, and for your investment thesis to play out. Don't get spooked by short-term market fluctuations or feel pressured to chase the latest hot stock. Stick to your plan, stay patient, and let the power of compounding work its magic. Remember, time is your greatest ally in the market. The longer you stay invested, the more opportunity your money has to grow. So, be patient, stay disciplined, and trust in the process. Section 5. Continuous learning. The journey never ends. As we wrap up this exciting journey into the world of stock trading, remember that learning is a continuous process. The market is constantly evolving with new trends emerging, industries transforming, and companies innovating at a rapid pace. To stay ahead of the curve and adapt to changing market conditions, you need to be a lifelong learner. Make it a habit to read financial news, follow market commentators, and stay updated on industry trends. Attend webinars, listen to podcasts, and connect with other investors to gain different perspectives and insights. Remember, the more you learn, the more confident and informed your trading decisions will be. Don't be afraid to experiment with different trading strategies, tools, and techniques. What works for one investor might not work for another. The key is to find what resonates with you, your risk tolerance, and your investment goals. And remember, I'm always here to guide you on your trading journey. So stay curious, stay informed, and never stop learning. Congratulations, you're on your way. We've reached the end of our whirlwind tour of the stock market. Give yourselves a round of applause for taking this important step. You've faced your fears and emerged with a solid foundation of knowledge. The stock market is a vast playing field for anyone with the right mindset. You've taken the first step. Now keep moving forward with confidence. Section 2. Your journey to financial freedom starts now. Don't let this be the end of your stock market education. This video was just the tip of the iceberg. The real learning begins now, as you start applying what you've learned, making those first trades, and experiencing the ups and downs of the market firsthand. Remember, every successful trader started somewhere. They made mistakes, they learned from those mistakes, and they kept pushing forward, driven by their goals and their belief in themselves. You have that same potential within you. Now I know that taking those first steps can be daunting. You might feel overwhelmed by the sheer volume of information out there, unsure of where to turn or who to trust. But that's where I come in, my friends. I'm here to guide you every step of the way, providing you with the tools, resources, and support you need to navigate the market with confidence and achieve your financial goals. Section 3. Stay connected and keep growing. Remember, you're not alone on this journey. Surround yourself with a community of like-minded individuals who share your passion for investing and financial empowerment. Join online forums, attend local investment clubs, or connect with fellow investors on social media. Share your experiences, learn from each other's successes and failures, and celebrate your collective journey towards financial freedom. And most importantly, never stop believing in yourself and your ability to achieve your dreams. The stock market, like life, is full of challenges and rewards. Embrace the journey, stay focused on your goals, and never give up on your pursuit of financial freedom. I'm excited to see what the future holds for you, my friends. Now go out there and unlock your financial potential.